Hey everyone, welcome back to In Layman's Terms, your go-to channel for deciphering the world of personal finance without the jargon. Today, we're unraveling the mystery of credit cards. These little plastic cards hold immense financial power, but understanding them doesn't have to be complicated. Stick with us as we break down everything you need to know. But before we jump in, as always, remember guys, life's complicated enough, but your personal finance doesn't have to be. Having said that, let's begin with our video. Credit cards essentially are financial tools that allow you to borrow money up to a predetermined limit. This amount doesn't come from your bank account, but it comes from a credit card issuer. It's like having a small loan in your pocket. The limit is set based on your credit worthiness, which involves factors like credit history, income, and existing debts. Credit history is a record of how you've managed the repayment of debts, such as credit cards and loans. Your credit history is recorded in your credit reports, which also contain additional information about your finances. Now let's get into the nitty-gritty of how they operate. When you use your credit card to make a purchase, you're essentially entering into a short-term loan agreement with your credit card company. At the end of each billing cycle, you receive a statement detailing your transactions and the total amount owed. You then have the choice to pay the full amount, avoiding interest, or pay a portion and carry the remaining balance, incurring interest on that amount until it's paid off. Interest is what credit card companies charge you for the privilege of borrowing money. It is typically expressed as an annual percentage rate or APR. Credit card companies generally charge an annual percentage rate or interest of 23 to 24%, which is much higher than most other loans, so be mindful of that. However, you are only charged this interest if you don't pay your bill in full each month. So, why should you bother with credit cards? Well, they offer unmatched convenience and security. Credit cards are much more safer to carry and use than cash. If you lose your wallet or get robbed, you are most certainly going to lose your whole amount of money. If thieves go on a spending spree with your credit card, however, you generally won't be held responsible for any of those fraudulent purchases. It may take some time to sort out the problems, but you won't lose any of your money. Responsible credit card usage also provides a lot of benefits, like cashback, travel rewards, and purchase protection. Credit card rewards exist to encourage you to use your credit card, and they're very persuasive indeed. With a simple flat rate card that pays the same amount on every purchase, you can get around 1.5 to even 2% of every dollar you spend, either as cash, points, or miles for your travel. Spending around $1,000 a month could yield you anywhere between $180 to $240 a year without any effort. Careful use of credit card is the single best way to improve your credit score. Here are some points that I want to highlight if you have really good credit score. You get money at a very good interest rate. You qualify for the best credit card deals. You improve your chances of renting a home, and we receive a better car and home insurance rates. Lastly, in emergencies, a credit card can be a financial safety net, providing immediate access to the funds that you normally won't have. Now let's talk about the different tiers of credit cards. Entry-level or basic credit cards usually don't have very high credit score requirements. But as you move up the ladder, premium or reward cards usually demand a much higher credit score. Understanding these tiers helps you choose a card that aligns with your financial situation and goals. Remember, your credit score is a crucial factor in determining your eligibility for many of these cards. Now let's get into the details and talk about each of these tiers. Tier 1. Starter cards. Starter cards are designed for people who have very little or no credit history. Higher level credit cards often require you to have a positive credit history before you can even apply for them. So starter cards are a way to accrue positive credit history to qualify for a higher tier ones in the future. Some examples are student cards, secured cards, and unsecured cards. Tier 2, no annual fee cards. These credit cards maintain no annual fees and usually have a basic rewards program in the form of cashback, airplane miles, or points. These usually have a credit limit of around 500 to the low thousands. Moving on to the Tier 3 or mid-tier cards. In this next level of credit cards, you can really start to see the benefits of reward programs. Not only can you earn a lot of points to go towards airline miles and hotels, but you can also receive perks like free checked baggage, priority boarding, and more. Credit limits for mid-tier cards will start around $5,000 and can go all the way up to $7,000 or even $10,000. Moving on, let's talk about Tier 4 or premium credit cards. These cards consist of the highest tiered credit cards you can apply for. This is when perks become a major selling point, since being a premium card holder gives you access to copious travel benefits. Tier 4 credit limit can exceed $10,000, which leaves plenty of space for major purchases. And lastly, let's talk about Tier 5 or invitation-only cards. Top tier credit cards are reserved for top tier customers. These exclusive credit cards aren't advertised because you have to be invited by a bank or a corporation to get the card in the first place. And the only way to even get invited is to have a thick wallet and or some sort of celebrity status, like being related to royalty. Credit is a cornerstone of financial life in the United States. If you're starting from scratch, your first step will be to build a credit history. This means opening or getting added into an account that reports to at least one of the three major US consumer credit bureaus, which are Equifax, TransUnion, or Experian. The trouble is that many companies want to check your credit before giving you a loan or credit card, and they may be hesitant to give you a credit card if you don't have any credit history. Fortunately, credit card companies offer secured credit cards specifically for people who are new to credit or rebuilding their credit. Since spenders are only borrowing money they put down as deposit, there is little risk for the lender, and it gives them a snapshot of your spending and repaying habits. Another way to start building credit is to become an authorized user on an established credit account, such as your parents or your spouses. Now that you have your credit card set up, the next step is to build an excellent credit. The first point is to pay your bills on time. One of the most important credit scoring factors is your payment history. Try to have a system in place that reminds you to pay your bills when they are due. The second point is to use your credit card sparingly. Another important scoring factor is how much of your available credit you are currently using. This is also known as credit utilization. Only using a small portion of your available credit is best for your score. Experts recommend keeping your utilization under 30%. As much as we love the perks, we must acknowledge the risks. Credit cards can lead to debt if not managed properly. High interest rates can accrue if you carry a balance, late payments can harm your credit score, and overspending might become a slippery slope. Awareness is key here. Being mindful of your spending, paying attention to due dates, and staying within your means can help mitigate these risks. So there you have it, a deep dive into the world of credit cards. Whether you're just starting your financial journey or looking to refine your credit card strategy, understanding these intricacies is very crucial. If you found this breakdown helpful, then don't forget to like and please share your thoughts on the comments down below. Please subscribe to my channel for more insightful content. But before we leave, as always, remember guys, personal finance doesn't have to be complicated. It can be as clear as a day, just like our channel's mission. Having said that, I'll catch you in the next one. Goodbye.